Okay, we'll kick it off. Hello, everybody. Welcome to the Blockchain Caucus briefing on crypto mining. Really excited to host this today. And thank you all for joining us. I'm Lizzie Fallon. I work for Congressman Emmer, who is one of the four co-chairs of the Blockchain Caucus. The other co-chairs are Congressman Soto, Congressman Foster, and Congressman Schweikert. So we're really excited today to be joined by Tina and Tom from the Digital Chamber, who helped organize this briefing, as well as three leaders in the crypto mining industry. We have Dave Farrell, who's the co-founder and CEO of Compute North, Whit Gibbs, who will be joining us soon. He's the CEO of Caucus, and we have Fred Teal, the CEO of Marathon. I'll kick it over to Tom now, but we're the Bipartisan Blockchain Caucus. You guys can reach out to me or any of the other of the co-chair offices if you guys have any other questions, but we'll kick it into the conversation. So I'll hand it over to Tom. Thanks.
Hey, Lizzie, and thank you to the Blockchain Caucus for hosting us here. I represent the Chamber of Digital Commerce, established in 2014 to advance digital assets and blockchain technologies throughout the country, but particularly here for the policy world. We have three of our members here on behalf of the mining community. We've recently established a mining initiative here, and we at the Digital Chamber, believe that we could be a resource for all on the Hill, and we're working on this education piece. So I'd like to introduce look at the next slide. First, the agenda we're going to go over today. We're going to be hitting points such as what are digital assets, evolution of blockchain, the migration, particularly from China to the United States, what exactly is mining, some kind of information on common misinformation, and then one more high point and main point we want to hit here is the energy transition and challenges, and then how we could all work together between policymakers, both on the Hill and in the executive branch, and kind of help out the industry in this emerging market throughout the world. So. And after that, hopefully with some time, we'll have some Q&A at the end. So if anyone has any questions, please hold it till the end and we'll be able to answer. But I want to introduce our speakers today. As Lizzie said, Dave Farrell, CEO and co-founder of Compute North, Whit Gibbs, CEO and co-founder of Caucus Mining, and Fred Teal. So Dave, if you want to give a quick background on yourself and what you guys do at Caucus North.
Yeah, thanks, Tom. Thanks, Lizzie. Happy to be here today. Hello to everybody. I think I'm the only panelist without some sort of craziness, with Whit being on the other side of the world in Dubai and Fred dealing with earthquakes. So I feel fortunate. I only have a little bit of snow in the background here at our headquarters in Minneapolis. So I'm Dave Farrell, CEO and co-founder of Compute North. Been in the data center managed services space for 27 years. Three-time technology founder, really grew up with the internet, and I'll talk a lot about kind of the parallels and similarities that we see in this industry. Got very interested in what was going on in cryptocurrencies and Bitcoin, and specifically mining. And we'll talk a lot more of that today, back in 2017. And have since scaled up our business to really provide the most environmentally friendly, cost-effective computing in the world. And so I've worked very closely with both Lizzie and Tom on education, some of the components around regulation, and excited for this discussion and panel here today. And I'll reiterate, we're here as a resource. So we'll drive it however the team wants to, and excited to answer any kind of questions and Q&A following the presentation.
Thanks, Dave. Over to Whit Gibbs, the CEO and founder of Caucus Mining.
Hey, everyone. Thank you so much. This is a privilege to be here speaking with you all today. I am Whit Gibbs, CEO and co-founder of Caucus Mining. Caucus Mining is a bit differentiated from the other panelists in that we focus specifically on helping everyone mine Bitcoin. Caucus launched in August of 2020 to focus on getting more retail interest in the Bitcoin mining space, which has historically been more of an industrial space. Prior to Bitcoin, I actually was in the consumer tech industry, worked at a tech startup in Florida before catching the Bitcoin bug and diving in. Started a podcast focused on Bitcoin mining in 2018, and that's how I got into mining. Started interviewing people and realizing that there was a demand for everyone to be able to mine Bitcoin, and we launched Caucus just for that reason, to become this Airbnb for people who wanted to get into the Bitcoin mining space. So I'm excited to share more of the retail lens today and talk about how there's a lot of good that's coming from mining and how there are many people in the United States who are benefiting right now from this new wave of Bitcoin mining that's coming on.
Thanks, Whit. And Fred Teal, CEO of Marathon Digital Holding.
Hi, good morning, everybody, or good afternoon, I should say, for those of you who are on the East Coast. It's a pleasure to be here. Marathon Digital Holdings is one of the largest publicly traded Bitcoin mining companies in North America today, one of the largest players in the world from an overall hash rate perspective as well. We're very focused on being a self-miner, so unlike many of our colleagues in the industry, we don't operate hosting facilities where we invite other miners to mine while also mining our own Bitcoin. We just mine our own Bitcoin. We partner very closely with companies like Dave Perel's Compute North, who acts as our primary hosting partner, to deploy our miners in the most optimized energy systems in the US, focusing on becoming fully carbon neutral in all our operations by the end of next year. And we're growing very rapidly, and it's a pleasure to be here.
Thanks, all. And yeah, so we have, like we said, three of our largest mining members here from the Digital Chamber, and kind of three different perspectives here. So we're going to kick it off with Dave, and he's going to launch into what are digital assets.
Thanks, Tom. So I think just as we start to dive into what is mining, how does this all play together? How does it play together with the energy construct? I think it helps to have a basic understanding of the digital assets and the overall ecosystem that we're talking about today. Put very simply, a digital asset is something that has value and can be owned digitally, but it can only be owned by a single person. So there's no physical presence. These can be anything. And I think that's one of the misnomers that we see right now in the sector, in the space, is that it's been tied primarily to currencies, to is there some sort of value. We're starting to now see these types of applications being presented to real estate, titles, any types of art, any types of assets that are singular in nation. And we're seeing a lot of these things called NFT, or not what are called non-fungible tokens. I think when you really step back and look at what this ecosystem is about, it's a way to establish trust. It's a way to establish trust between two people over the internet that don't know one another, that have no government, that have no court or no lawyer in between, and be able to transact accordingly. And so that's the key part of this, is that ownership and this transaction is recorded in a way that can't be altered, can't be changed, can be verified by every single person in a 100% transparent way. And this entire ecosystem has just an amazing amount of innovation and amazing amount of change. Even I, who am in it each and every day, am flabbergasted by the amount of information, candidly, that I don't know, because there's so much change day to day, and just people coming up with great ideas and ways to alter and change this. But certainly the granddaddy, Tom, if you would flip, the biggest one that is the most well-known is what's called Bitcoin. This is the one that gets the largest press. It's the one that's featured in the Wall Street Journal and the New York Times. It's the oldest, and it's the most well-known of these types of currencies and this type of application. And Bitcoin, put very simply, is a decentralized digital currency. It's made that it can't be inflated, it can't be changed. There will only ever be 21 million coins. Today, it's primarily treated as a store of value, and a lot of people linking it to a digital type of gold. And it operates on a worldwide global basis. We'll talk about a little bit here of how this has changed over time. China used to be one of the largest operators of the Bitcoin network itself. That has certainly migrated now to the US just in the last several months. But candidly, anyone, anywhere with an internet connection and the right kind of computer can participate upon this. And the transaction costs are intended to drive very, very low, particularly compared to traditional banking. And ever more, it's becoming more and more of a digital asset class that is becoming institutionalized. And I think Fred and his team over at Marathon are a perfect example about this. When we were dealing with customers, 3 or 4 years ago, it was primarily small retail investors, speculators, people that simply wanted to get in and get out. And what has happened since then, we're now dealing with large publicly traded companies that are looking to put large amounts of capital to work, that have a much longer time horizon, 5, 7, 10, 20, 50 years even. And they're very much concerned not just about profits, but about the overarching industry at large. So things like the environmental footprint, things like the social and governance portions of this, and how do we become good citizens and make this an industry that continue to scale and grow is becoming very omnipotent. So I think that's very encouraging from us because of the amount of institutional investment and just the brand names that are coming into it. It's a very exciting time to be a part of Bitcoin. Next. And the best analogy that I have, and I think kind of brings this into perspective, is I told you my first company that I founded in the 90s was an internet service provider. So I was kind of front and center in this world. If you remember, AOL and Prodigy and CompuServe, those were our competitors. But we did online dial-up modems and the early days of the internet to get online and make things work. And when I take a step back, Bitcoin and blockchain in this entire industry are following almost the identical trajectory, but it's faster. And both in terms of adoption and the amount of innovation and investment that's going into the industry. Fred and I have thought about this many times, but is it 1997 or 1994? And I'm going to give this one to Fred. I always say 1994, but we'll say 1997 in this example. And what we mean by that is it was the early days of the internet. The internet was still a little quirky. It was a little hard to use. If you told people you had an email address or even a web address, it was somewhat, people would look at you a little interesting, like, really, what is that? Fast forward, back to 2005, and it was ubiquitous. Everybody had an email address. Everybody knew what the web was. Everybody could use it. It was simple. It was built into your computers. It was built into your smartphones. And we're seeing that same adoption curve with what's going on with blockchain, with crypto. The projection right now is between 2021 and 2025. The amount of users on these networks is going to increase from 130 million to well over 1 billion in the short time frame of just 4 years. And we're obviously well past that already into this year in terms of just the amount of user base and the amount of momentum and the amount of excitement along with it. And I think that just bodes so well for the industry at large. Next slide, please. So one of the fundamental things that we also see, we'll talk a bit about this here in a few moments with some of the misinformation, is Bitcoin, blockchain, distributed networks are truly a platform and an innovation. If you look at what made the internet successful in the mid 90s, was the fact that there were standards, people followed it, and they were allowed to innovate on top of that. And blockchain and Bitcoin specifically, and some of the other networks that I think are right behind it, are evolving. There's a ton of innovation going behind it. There's standardized platforms that are being built out. And what that means is there's a large set of rules, there's a large set of people that are backing it, and they are committed to seeing this being in a long-term part of the ecosystem. And now what starts to happen is the internet itself wasn't the value, it was built on top of that, right? First it was email, then it was some things like Telnet and news, and also the World Wide Web was invented. And think about the innovation that continued to occur and is still occurring to this day once that platform was put in place. And we see blockchain, we see cryptos taking the same exact ecosystem. Initially, it was just Bitcoin, right? It was simply I could transact and I could send a coin back and forth. Then a few years later, we saw some things with what were called smart contracts. Think of the ability to settle futures contracts, or if there's some sort of element that if something happens at a certain point in time, one party's paid out or another transaction settles without having to have a lawyer or a government enforce that. Those are some of the exciting things. Now we're seeing things like side chains, which are additional innovation layers being put on things like Bitcoin and blockchain. And we're just at the early innings. So things like programmable smart contracts, industrial applications, all these types of new things are coming and starting the innovation, which is why I think it's a very exciting time to be a part of this ecosystem. Next up. And I'll hand it over to Whit to talk a little bit more about what is going on in the mining side today with hash rate.
Well, yeah, thank you, Dave. That was great. And, I echo everything that you say about us really being relatable to the internet. Talking about global hash rate evolution, as I sit in Dubai, finishing up a conference where you have people from all around the world coming to figure out how they can get more involved with this underlying architecture of Bitcoin. This is really apropos. Us as miners, we've always focused on where we can put infrastructure in place that will most efficiently support the Bitcoin blockchain. And initially, the majority of this was in China. For the vast majority of Bitcoin's early history, you had almost 70% of Bitcoin's total hash rate, which is the computational power that's produced by all of the machines that are running on the Bitcoin network, was centralized in China. And in June of this year, we saw some sweeping regulations from China, basically banning Bitcoin mining, which then caused all of these people, all of these businesses that had supported Bitcoin's blockchain to have to find somewhere else to go. And that push from the Chinese government, it actually created a massive opportunity for every other nation to capture these new businesses, this infrastructure, this underlying technology of what can go to power the future innovation that I think we're all going to see over the next few decades. So when that ban passed in June, we saw a tremendous amount of the hash rate fall off of the network in July. And this is actually when everyone had taken their machines offline. They were looking to find a new home for them. But because of such a tremendous amount of this computational power needing a place to go, there was just nowhere to put it. There's no rack space to put it. There were no data centers to house it. Companies like Compute North that Dave's running were scaling as fast as they could to meet these demands, and still are, frankly. And it has actually, the United States has been a big winner of this. We've seen a tremendous amount of hash rate go to Kazakhstan because it's close to China, Russia because of proximity as well, and then the United States. And, you know, when it comes to the United States and Canada, all of these businesses that we're looking to move, they prefer the political stability of our country and the ability to know that they're going to be safe here. They're not going to have to worry about such sweeping regulations that could potentially harm them in the way that it happened with China. And if you could go to the next slide there, Tom. We're now seeing this all play out. You know, where we had 65% of the hash rate in China over the past couple of years, all of this is now being forced to move. And this is not only good for us as a nation, but it's good for Bitcoin in the energy usage component. We're going to talk more about that later as Fred gets into it. But obviously, when you're talking about energy consumption in China versus in the United States, it's a drastic difference in how that energy is being consumed, where, you know, there a heavy percentage of the power used to mine Bitcoin was in coal, some was in hydro. But as that moves to other regions like Russia or Canada or the United States, an overwhelming percentage has shifted away from those fossil fuel sources and switched to hydro or other sources of renewables, which I know we're going to discuss more. But we are really now in this point where many places, states, people around the United States have been able to capture this new opportunity that's coming in. You know, Compass as a company, we manage over a dozen data centers in 5 countries. And the biggest country of growth for us over the last 6 months has been the United States, because more and more people are preferring to come here and host their machines because of the stability. We go to the next slide, Tom. Thank you, sir. And this is, if you haven't seen it, this is what a Bitcoin mining facility looks like. This is one of Dave's facilities out there in Nebraska. And we host some of our machines there. You know, these can be built in many different ways, but as these facilities are built and scaled, not only do they, you know, look cool, and when you go out there and the scale of them is amazing, but they provide a tremendous amount of jobs, well-paying jobs in communities that often are in need of those jobs. And as more and more of this infrastructure comes to the States, more of those jobs are created and come here with them. One of the things at Compass that we've really been able to see and experience firsthand are the social benefits of Bitcoin mining. You know, we are now in a time where I know some people would say that the middle class is becoming less and less of a thing, but we're seeing a real resurgence of this with the opportunity of mining, because it's giving people who have a desire to invest and generate some yield from these investments to have something new that they're able to invest in. You know, before they may have wanted to buy a house and flip that or rent it. But because of markets, prices have gone up to a point where it's not always profitable to be able to do such things. So now they're able to turn those investment dollars to Bitcoin mining and generate some yield and move their family up. Also, the Navajo Nation, you know, we put out a really cool story a couple of weeks ago, where the Navajo Nation, which, you know, 48% of the Navajo Nation lives below the poverty line, they have a tremendous amount of energy on the reservation, but they don't really have anything to do with it. So what they've done is they've turned to Bitcoin mining. And the ability to create this industry on the reservation has started to create jobs for those that are disadvantaged, and also to provide a sustainable amount of income for the tribe itself. And then one of the most important things, especially as we're talking about the energy consumption that Bitcoin is using, is that Bitcoin mining is one of the biggest supporters of regional power producers, and it allows them to subsidize residential energy costs. And how this happens, and in particular, Compass is partnering with a nuclear mini reactor company called Oklo. These mini reactors are built in areas where municipalities struggle to get affordable power. So Oklo is able to build a reactor there and provide power to the city. And then Bitcoin miners like Compass were able to come in and take any power that they're not able, that the town is not able to use, which allows us to effectively subsidize the costs for the town so that they can get cheap power. And of course, we're there to help with that subsidization. So, there are a tremendous amount of things that Bitcoin mining is bringing to the nation right now. And these are all, as we talk about this, and I hope we can dig in with some Q&A, all things that I think we're all going to be able to help people understand better and benefit from more. I'll pass this off to Fred.
Thank you. Appreciate it. And by the way, Marathon also mines at Kearney, Nebraska with Compute North. So it's all in the family there, I guess. So, want to talk a little bit about some common misconceptions related to Bitcoin mining. One of them is, Bitcoin mining uses more energy than nations. And, you could say the same thing about the banking industry in this country. You could say same thing about many industries in the US. In fact, Bitcoin mining consumes less than 0.12%. So 12, in other words, 1.2 tenths, if you would, of a percent of the world's energy production. And it's the most transparent use of energy and also the most effective conversion of energy to value that there is in the world. Most people also think that energy is a zero-sum game. I'm going to take away energy from consumers by using it for Bitcoin mining. That's not true. In this country, we have generated and consumed 4 terawatts per hour of energy for 20 years, and it's actually consumption is going down. And there is an excess amount of energy, and I'll talk about that in a minute. And we waste a huge amount of energy in this country. And Bitcoin's total consumption of energy is just a small fraction of the energy that's wasted by just Christmas tree lights in this country alone. So there's also a misconception that Bitcoin is not concerned with the environment, and that's not true. Bitcoin miners are very concerned about using renewable energy and operating in carbon neutral forms. Companies like Marathon have declared that we're going to be 100% carbon neutral in our operations by the end of 2022. Most of the power that Bitcoin miners are trying to connect to today is renewable, and there's an important reason why. It's the fact that for a renewable energy provider, they often get curtailed from their energy use because they're producing more energy than the grid needs at a particular time. And that is lost revenue for them. But if they have Bitcoin miners operating within their facilities, they can use that energy, that excess energy, to mine Bitcoin and generate more revenues. And that's one of the key functions that Bitcoin miners provide to renewable energy companies, which helps renewable energy companies invest in more renewable energy generation assets, which is very important as we look at moving the transition from fossil fuel energy generation to purely renewable in this country over the next decades. People worry about Bitcoin being an anonymous currency. Well, in fact, Bitcoin is completely transparent. You can track the movement of coins from wallet to wallet. And as anybody who does a little bit more research can easily see, it's been very easy for the authorities to track ransomware deposits in Bitcoin wallets as they journey across the crypto world amongst exchanges and other places. So Bitcoin actually is extremely transparent. And people also talk about that the energy transition to renewable, that it's not this binary event. It's a transition. It will take time. If you look in Europe today, you can see the example of what happened when they shut down nuclear, shut down fossil fuel, and went as quickly as possible to renewable. Well, the wind's not blowing as much as it was expected, and hydro's not delivering as much power as expected. And so Europe is in an energy crisis, forcing them to import more natural gas from Russia. The US is in a much luckier position in that we have excess energy production in this country and can take that transition and move it slowly. If we look at overall, Bitcoin mining energy use, and this is a slide prepared by the Bitcoin Mining Council. Total energy generated worldwide is 162,000, a little over 162,000 terawatts, terawatt hours of energy. And of that, 50,000 terawatt hours are lost due to inefficiencies. This is transmission line issues where you can only really move electricity 500 miles. And if you, as you move it, it loses power, if you would, along the way due to impedance, heat, and other things. And when you compare that 50,000 terawatt hours of energy that's lost due to inefficiencies with the 189 terawatt hours of energy consumed by Bitcoin mining across the globe, you'll see that we use a very, very tiny amount of that wasted energy. And the energy we use is typically coming off as what's called base load. So at the point of power generation, which means it's not wasted. We take advantage of it before it gets sent down the high tension cable and gets wasted. So that is a net gain, if you would, an efficiency for the grid. If we go to the next slide and look at energy use versus US electricity generation, well, there's 10,400 terawatt hours totally generated and distributed in the US. And of that, 6,800 terawatt hours are lost. So again, 189 terawatt hours used by Bitcoin miners is just a small fraction of the energy that's lost just due to inefficiencies in our grid system and our power generation system today. So as we look at the challenges to the ongoing transition, 19% of electricity in this country was from coal, and it created 54% of the power sector's emissions. 80 coal plants with a total capacity of 98.3 gigawatts are scheduled for full retirement over the next 30 years. And renewable differs in two key ways from fossil fuel generation. For one thing, it's intermittent. The wind only blows certain hours of the day, the sun only shines certain hours of the day, and you need to have access to power when that's not happening, and you need baseload energy at that point. The other thing is renewable energy is very distributed, and it's not always in the locations where consumers need to consume power. So this creates two challenges for the grid. One is transmission, which is essentially matching supply and demand, and the other is making the investments in generation, transmission, and storage. So I think at that point, I'm handing back to somebody.
Dave, Dave will take this one.
Thanks, Fred. And so obviously the reason that we focus so much on both the energy piece and just the general education of crypto, Bitcoin, and the like is that kind of the easy argument is that it uses energy, and the easy criticism is that it uses too much energy. And frankly, I think that's a lazy argument. And what I mean by that is most of the time when I dive into that argument, there's a lack of understanding on one of two key sectors. One is, what does the actual technology value? Like, what is the value that the ecosystem brings, and how is this ultimately a platform that's going to grow? The second of all is truly understanding the energy grid and this component. As Fred alluded to, the energy grid is in transition. There's a huge move. Renewables are moving forward, and that's a great thing. I think it's a great thing for the environment. I think it's a great thing for the country. I think everyone's excited about it, including the Bitcoin mining and our entire industry, including the data center industry, which is even a larger component of some of the energy use. But it comes with its own set of problems. And one of the things is understanding, as Fred talked about, is how do we transmit this power that's normally generated in areas that people aren't, unlike the fossil fuel, and how do we deal with it at times when there's not enough ability to generate to meet demand. And some of the things that we're starting to see come forward is what is called the duck curve. And oops, sorry, did you flip the slide, Tom? Could you flip one back? That is on the middle slide here, which is one of the issues that is becoming bigger and bigger and more paramount, particularly as solar power is becoming a bigger part of the equation. So if you think about it, every single day there's a large generation of solar that comes online and then comes offline. And that is the dip of what's now called the duck curve. And what needs to happen from the energy component is when solar is generating, the overall rest of the energy created in the grid goes way, way down. And you can see that throughout those daylight hours. But then once it gets dark in the evening hours, it cranks up. And a lot of the energy usage is used at the end of the times of the day when people are coming home, commuting, industrial processes are starting to turn off, etc. And that's one of the big challenges, is how to deal with that. And you can see on the right, we're seeing a big issue too, where utilities are starting to fill in with curtailment. And so that is where our types of load start to make very intriguing sense for these utilities, because versus having to build out that additional generation, just like building 8 more freeways to deal with the, the 4 p.m. to 6 p.m. rush hour type of scenario, we're talking the same thing on the energy grid. Instead of building that out and having all that excess generation for just that very small peak point, you can have what's called curtailment or demand response programs. And think of that as the reverse, where we actually shut down at those times that are needed. So next slide. And so Compute North has really taken this since day one as one of our fundamental factions of what we call tier 0 computing. And think about the way data centers are formally built out, tier 1 to tier 4, the higher up that you go, the larger you go, the more redundancy, the more robustness, candidly, the more cost, and frankly, also the less flexibility. Those would be Amazon, Microsoft, Google, the large scale, hyperscale types of data centers that are fantastic for running mission critical types of workloads. We consider our type of compute to be on the absolute opposite side, meaning that it's very portable, meaning it's something that we can and should put in the spots that makes most sense for the grid and makes most sense for the energy operators. And secondly, should turn off at the times when it's not needed, or times when, I should put it another way, when the grid needs it for other purposes. Health, hospitals, human services, etc. And we see this as a real key solution for 3 areas when we talk about the grid transition. The first one being is, how do we increase generation? And being able to have additional demand, I think is a great thing to allow new renewables to be built. We can bring tax equity dollars, we can bring investment dollars, we can bring the type of infrastructure money that's needed to put these things in the ground. And that's obviously great. I don't think anyone is ever, concerned about necessarily the use. They're concerned about the generation, if you really pull back the argument. The second piece is, how do we get the investments to be able to move that energy around? And again, if you think about it as the rush hour idea between 2 cities, transmission lines is what can bring that energy from where it's generated to where it's used. And a lot of times in today's world, that is underbuilt. And that certainly needs a lot of investment and a lot of money to get there. And we can help fit those areas of congestion for the time frame so those renewables can be built up until that transmission and that freeway can be put in place. The last is the demand response component. But how do we shut down? How do we help them manage that supply and demand for those peak periods of time when it's really needed? And there's no better case study than what happened in Texas in February of 2021. So Compute North is operated in Texas, in South Dakota, in Nebraska. That's where our 3 operations are today. And during that scenario, we simply shut off. We shut down for, I think, 4.5 days. We shut down our entire operations. And that was energy that was used for other purposes, health, human services, heaters, which is kind of rare in Texas, but people were able to leverage that resource for other things. And we see that continue to grow at a bigger and bigger scale for those types of purposes. Mining is no longer what it consider a zero-sum game, or what we call a parasitic load, where we want as much energy all the time, no matter what the resource or whatever else is going on in the rest of the world. We are very cognizant of everything else that's going on, and we want to be good citizens, and we can make this a win-win scenario. And Texas has been, really set up to make that happen, and we're seeing a big push in the rest of the energy construct to do the same.
That's awesome. I'll jump in here if you guys don't mind. We've gotten some questions from the audience. So thank you all for the fabulous presentation and briefing us all on the different use cases of crypto mining and where it can provide value from an infrastructure standpoint, from a renewable standpoint to the United States. One of the first questions we got was, when all 21 million Bitcoins are mined, what role will mining have in the Bitcoin blockchain? Yeah.
So I can take that. The miners, essentially what we're doing is we're processing transactions on the blockchain. We aggregate transactions, we form them into a block, we do a mathematical proof to create a hash for that block, we then guess a number, that block gets added to the blockchain. And that's what we do. Today, while Bitcoin are still being awarded, the blockchain awards us every time a miner wins a particular block, then an award of currently 6.25 Bitcoin plus some transaction fees are given to the miner. And today, 97% of a miner's revenues are the rewards. Only 3% are the transaction fees. Over time, as the number of transactions on the blockchain grow and the fees grow, the transaction fees will make up more and more of the revenue of a miner. And one can expect that in the future, as we get to the last Bitcoin, miners will be operating very, very highly energy efficient systems that use but a small fraction of the energy that we use today to operate, and will operate very efficient transaction processing nodes effectively, if you think. And that's how the blockchain is secured. If you don't have miners in a proof of work environment, the data can't be secured and the blocks can't be added to the blockchain. In difference to a proof of stake model, which typically operates in a more centralized manner, where stakeholders, if you would, stake their crypto against the fact that they may not properly authorize a block and have an error. So it's a very different model.
So essentially, like, as more Bitcoin is mined, the more efficient it becomes from an energy consumption standpoint, it sounds like, which is really fascinating. Yeah. We had one question from the audience that I think pertained to one of Fred's slides, but I'll open it up to anybody that wants to answer. They mentioned that they asked that one of the previous slides said that energy use is transparent because it can be verified. How is that done? And is that for mining as well as for transactions? So I'll let anyone take it away with that.
I can jump in on this one.
Go ahead. Yep.
Well, yeah, just because, I mean, we're working with a number of facilities in different jurisdictions, and there are a number of ways that we can confirm the energy sources that that certain facilities are using. Some of that comes down to just looking at the grid mix on the various grids that you have there, throughout the United States. Any of the ISOs or the independent agencies that are offering power to these data centers, they are able to provide you with the actual energy mix that they are using. So, as an example, we just signed a facility, and we're able to see that the breakdown of energy is nuclear, wind, solar, hydro. We're able to get those percentage by percentage and factor that into the production. And when it comes to mining the Bitcoin versus the transactions, the energy consumption is the same. It's all the same process. So if you're running these, these ASICs, these computers in a facility, whatever the power source is for that facility, that's not only mining new Bitcoin, but it's also the same energy source that's producing or processing these transactions.
Yeah, that's really fascinating. Someone from the audience asked a great question. How do you expect other forms of consensus, proof of stake, history, authority? How do you expect those to impact mining? Can facilities designed to conduct proof of work for Bitcoin be easily converted if other blockchains like Solana or Ethereum take market prominence? What does that transition look like?
Can I take that one? So yep. I'm sure my cohorts will have some opinions on it too. So Michael, great question. I think this industry is ripe for innovation. And what you point out is the consensus side is certainly where a ton of ideas, thoughts, and just innovation is being driven. Last I checked, there was like 27 different ways to do consensus, with proof of stake, I think, being one of the big ones that's come up. My fundamental belief is there's going to be a ton of different rooms and a number of different blockchains that are going to be winners. But I believe that Bitcoin and proof of work is here, and it's here to stay because it's a standard. And I'll use my best analogy of, we still run IP version 4 on the internet, which was invented in 1981. Most people aren't aware of this, but an update came out in 1998 called IPv6. And today, less than 5% of all nodes or computers running on the internet run IPv6 natively. And the fundamental fact is it just simply wasn't 10 times better, which is kind of the traditional approach on this. Bitcoin at this point and proof of work by extension are the only ones that have 12 years of operating experience. The only ones that have scaled to the level that they've done. As Whit pointed out earlier, 45% of the entire network came offline 3 months ago, and the network continued to run just perfectly. I mean, try that with a power network or the internet itself or any other network you can name. I can't imagine anything being able to run like it did. And it's fundamentally, one of the standards. But I do think there's going to be a lot of room for these other consensus algorithms to make them work. I think proof of stake is probably the most interesting one right now because of some momentum behind it. But I'll also say I think there's some fundamental, not necessarily technology flaws with it, but more around the way the markets and potential moral hazard issues. And it gets back into some of the ways that we work today, where those who have the most money make the decisions in these kind of networks, which I think is exactly what proof of work was intended to disrupt and make and eliminate. So I think it's going to be very fun, very fascinating to follow. But I fundamentally don't think Bitcoin's going anywhere. Now, to your question about do these centers change? What we build out is for any type of compute intensive, non-mission critical workload. And so that fundamentally directs itself to things like proof of work, not the other types of algorithms. Where we see potential is to do any type of compute that's energy intensive, but doesn't need to happen in an instant. So things like large scale machine learning, things like graphic rendering, things like climate modeling, things that are again, really data and compute intensive should be done in these very low cost, environmentally friendly types of compute environments. Things that are mission critical, like databases or e-commerce or, to many people, Netflix, right? Should be done in the higher end types of data centers that are intensely built for that. But we see a real bifurcation of this type of workload falling over time. And that's where we see tier 0 being a bigger compute movement other than just crypto and blockchain.
And thanks everyone for keep the questions coming. We're going to try to get to as many as we can here, but we're going to move back over to Fred, I believe, and he's going to go into some of the energy transition and the challenges of what the mining industry is currently facing.
Sure, thank you. So, one of the key transitions that's happening is the deployment of renewables. And while in 2020, solar represented less than 3% of the electrical supply, by 2035, it'll be over 40%, and wind, together with wind, 75%, which is a huge amount of growth. And if you think about the amount of capital that is going into the investment to build this out, it's very significant. And the most important thing for the renewable energy providers is to have a baseload customer, a customer that's going to be able to consume their power so that they can get a return on their investment. But more importantly, the transmission line, the power distribution grid, will only connect to the renewable energy source once it's built. And for the renewable energy source to get it built, they have to finance it. And for that, they have to have a customer. So chicken and egg, the Bitcoin miner provides the reason for them to build it. So it's another reason why Bitcoin miners are the primary reason that renewable energy systems can really get these systems financed and deployed. So if we go to the next slide, I mentioned previously, power generation exceeds consumption. And if you look over the past 2 decades, there hasn't really been a major change in either consumption or generation. Since 2007, we've essentially been flat in both areas. And part of that is the offshoring of manufacturing in this country, but overall industrial consumption and commercial consumption has dropped. Consumer consumption has gone up somewhat. If we look at the next slide, you can see a case study regarding the state of California, where the amount of times that essentially the energy producer was told to stop adding power to the grid, which is what's called curtailment, continues to increase. And it continues to increase to such an extent that if we go to the next slide, you'd see that in 2021, 1,398 gigawatt hours of energy was essentially thrown away. And this is California, right, from solar and wind. So if you were using a Bitcoin miner of the caliber that we use, which is called an S19, think of it as kind of a Mustang, if you would, that amount of energy would have allowed us to generate 16,000 Bitcoin, or approximately $1 billion. So the energy producers lost revenue, which had they been mining Bitcoin with that excess energy, would have been $1 billion in value, which they could have used to pay off their facilities and invest in additional energy. So if we look at Bitcoin miners as strategic energy partners, we're the ideal baseload consumer. You can have 100 megawatts of power that virtually at the flip of a digital switch, a energy source can turn on and turn off or curtail either in whole or partially if they need to provide more energy to the grid. And if they have excess energy, they just turn on more miners. So we're the perfect baseload customer for power providers, and that allows them to increase their revenues, which allows them to pay off their capital investments faster and deploy even more and manage that transition even faster. And for citizens, it's really about curtailing the miners instead of the consumer. How many people want to have their air conditioning shut down when it's 100 degrees outside by the power company because the grid is overloaded? Well, imagine if the power company had a baseload customer that was mining Bitcoin, that they could just curtail that one customer and not have to curtail the consumers. That has a huge impact on consumers and the quality of life that they have, especially as we have temperatures rising in many states and climate getting warmer. We're going to have to use more energy to run air conditioners, et cetera. And this is a great way to balance the grid and not have the type of issues that we had, for example, in Texas.
And then, so thanks everyone for the involvement to that in this today. And I just wanted to speak to, because we have many members of congressional staff on here, and how we can work together on things such as regulation framework. As Dave mentioned earlier, many see this kind of as how the lessons learned from the development of the internet over time, and many in this industry feel that the same light touch is how we should proceed moving forward in this universe. And it doesn't mean lack of engagement, but it means to, doing it correctly for the first time between policymakers, regulators, et cetera. So that's where groups like ourselves here at the Digital Chamber come in, working with all your staffs and your teams, and also within the executive branch to try to find best practices moving forward. Energy should be focused on the generation distribution, not the use here. As Fred went into, there's many benefits of how Bitcoin mining, digital asset mining can lead to transitions in the future of particularly the green energy revolution, and there's lots of opportunity there. So we should continue to explore those and develop where we can. Tax incentives for baseload deployment of renewables. There's states throughout the country who are starting to lean into this a bit and offering incentives to the mining industry to come to their states. It has led to developments. I can think of Wyoming and Texas off the top of my head, leading in that aspect. And then understanding key elements that are driving this industry, as we said, involvement in the utilities, electricities, connections, lots of opportunities in the developing both economically in rural areas particularly, and the energy transition. So all those kind of are things to staffers to mull over and hopefully come engage with us and how we could move this industry forward. And then kind of our conclusion here, Bitcoin is a strategic energy tool. As we said, there's a lot of opportunities there. This could be the transition, a way to transition to the future. Many are looking at different ways to go about this, and Bitcoin and digital asset mining as a whole can lead this development. There are technology platforms and standards that are set, and innovation. We need to scale ahead with all this, and in concurrence and in working with regulators and policymakers and stakeholders. That's how we should all move forward together. As we said, focus on the generation, not the use. The generation is where the opportunity lies in this, and as we stated, it's not the usage of energy should not be the sticking point there. It's how we are developing it and how we're moving forward. And with the hash rate moving to the United States, we had an unprecedented opportunity here to continue to push this industry forward. And things like this don't come around often, so we should take full advantage. And as we said a few times here, we're the foundation for technical advancements and leading to new economy opportunities or economic opportunities, energy opportunities, and charting that path forward. So we here at the Digital Chamber want to thank the thank the Blockchain Caucus for hosting. Thank you for our panelists, Dave, Whit, Fred. And like I said, feel free to the digital chamber here. We'd like to be used as a resource and as an education tool. So with that, I'll turn it back over to Lizzie and see if there's any kind of closing questions for these guys.
Yeah, I think one thing to kind of tie it all together. So I believe it was Whit who started off talking about how, the hash rate coming from China, these miners prefer the political stability of the United States. Can we talk about like any perspectives or comments on, with the infrastructure bill being signed into law today, that provision, which would make miners, brokers having to collect information on their customers, report it to the government? How does that impact our business here? How does that kind of regulating impact American competitiveness? And what should Congress be focused on moving forward to fix this, whether it's with respect to that provision or, other areas?
So, jumping in from Compass's point of view, right? If we're talking about a self miner, this is different than Compass, who, basically we sell Bitcoin mining hardware to people who are operating it for themselves effectively, mining for themselves, collecting pool payouts to their own wallets. Classifying us as a broker is a misnomer, to say the least, but it also makes it very difficult. It would make it very difficult for us to be able to service our customers properly because of the process of how the paperwork would need to go, right? Since we're not paying anything out, there's no distribution of tokens from Compass to customers. For us, it would put us in a bit of a bind when it comes to how we would operate. The other side of that equation is that the pool operators who are accumulating the hash rate, mining the coins, and then distributing those coins, some are based in the United States, most are based offshore. So if they're based offshore, how are you going to get them to be able to comply as they would need to provide the same service to customers within the United States? If that restriction was in place, then these pools, which are based in various countries, maybe the Czech Republic, maybe China, if they're not able to service clients in the United States, then how could smaller Bitcoin miners actually mine Bitcoin? And my theory is that they wouldn't be able to actually participate in this, which would rob them from this ability to generate any kind of substantial income from mining, and would eventually push that business to other countries who were more open and less restrictive with regards to how they were classifying things.
Yeah, I think it's important to clarify also, there are some US-based mining pool operators. Marathon operates a mining pool that's US-based. Because Marathon doesn't sell its Bitcoin, we hold it. The reporting requirement is fairly minimal from our perspective, but we do offer a way for miners to mine and provide full compliance with reporting through our pool, which is audited by a public accounting firm that audits Marathon. So very transparent and very economical. And that was a pool that we launched earlier this year.
And just add, from Compute North's standpoint, we just think there's in the bill as it's written today, there's just a lack of understanding of how this ecosystem works, and it just breaks. So I think there's going to be some modifications. Obviously, Digital Chamber's been first and foremost on this already. We provide infrastructure, we provide compute services. Our customers are Fred and the miners and actually doing that component. I agree exactly what Whit's saying. The pool operators are the ones that are definitely in the big red zone. Traditionally, the biggest regulation has begun on the exchanges, which is where fiat converts to crypto and vice versa. And I think that should be the continued focus. I think that's where the KYC, AML, real mandates have been, and I think that's appropriate. So I think this will work itself out. It's not amenable right now to function.
Yeah, absolutely. And before I pass it off to Tina, who's got a couple more questions from the audience, I'll just note for everyone, the Blockchain Caucus is looking at the most effective fix possible and exploring options there. So if you guys ever have any questions, your offices or your bosses are interested in being part of the solution, let us know and reach out to us. I'll kick it off to Tina.
Thanks, Lizzie. This has been a great briefing, guys. Thank you so much. And thanks, Lizzie, and to the caucus for having us. We have a few questions left from the audience. And we've got about 3 minutes. So I'm going to do this kind of rapid fire. So let's kick it off by e-waste. We hear a lot of concerns about e-waste that is generated from Bitcoin mining. What efforts are in place today to reduce e-waste? And what do you guys think about how we're going to continue to tackle that in the future?
I can take that.
I can answer.
Go ahead, Fred.
Yeah, I was just going to say, so, the average life of a miner rig, if you would, the hardware is 5 years. Consumer computers are thrown away every 2 years typically. So the Bitcoin mining industry produces a lot less e-waste than just consumer computers. If you go back and look at iPhones, there are billions of iPhones sold every year. There are billions of iPhones upgraded every year. There's much more e-waste generated by all the consumer electronics industry than the Bitcoin mining world. And our Bitcoin miners can actually be deployed and live for a longer period of time than their 5-year useful life if you can find curtailed power sources and stranded power sources for them. So,
thanks, Fred. Dave, quickly.
Yeah, I'll just add to that. We see a farm system coming down the road where literally older machines that have already been depreciated, already been in use, go to places where maybe they only run 6 or 8 hours a day. If you think about that, it's a huge win because it can leverage the energy. It can provide the needed hash rate to the network itself, but they don't need to run at times when the power would otherwise be used. West Texas is a great example of this. We're literally in the middle of the night. It's negative rates. And the only reason it's sent that is because tax incentives, but there's actually an incentive not to send energy to the grid. We could buy energy literally at $0 and the operators be money ahead. So that helps with the e-waste construct. I'll also add, we don't, in our system, we don't use air conditioning. We don't use water. We use just the absolute essence to provide the computing. And that's where a lot of that waste goes in traditional data centers where they get a bad rap. And we've really focused on an environmentally conscious compute. And obviously we anticipate that's going to even grow with time.
Thanks, Dave. Okay, next question. If decentralization is key for Bitcoin, how does mining being banned in China and most of it moving to the US and to a few states with larger miners, do you see a threat that Bitcoin mining could become less decentralized?
So I'd like to jump in and take this one. So, when it comes to Bitcoin mining, I think the important thing here is to focus on democratization as opposed to decentralization. Decentralization will happen by giving more people access to mining Bitcoin. Now, that's been our focus at Compass. We want different data centers around the world set up. Is there the possibility that 60 to 65% of Bitcoin's network hash rate could end up in the United States? There certainly is, because this country is developing fast to take that capacity from China. But as the Bitcoin network grows, what I think we will begin to see is a distribution of machines that will actually spread the hash rate to different places around the world, whether it's South America or Canada or Russia or parts of Europe, to where the network through democratization will naturally decentralize as more people have access to mining Bitcoin.
Awesome. Thanks, Whit. Okay, last question. We've got to answer it quickly. So if blockchain technology is fully adopted, how do you anticipate limited block space and transaction or gas fees impacting the ability to be a strategic energy tool?
So I think that's a great question. When we start to look at, Bitcoin itself, I think the market mechanics are already built into the way that both the rewards and gas, and it's not called gas, but the transaction fees in Bitcoin work today. It strikes an equilibrium, it strikes a balance. A lot of the genius about this technology isn't just around the encryption, the technology, like there's a lot of great ideas around that. It fundamentally fixes issues with moral hazards of transacting with people and how do markets work and how do you create incentives. And I think those are there. I've already seen it scale. I've seen it go up and I've seen it go down. I think this is something that's here to stay and is built for the long term. So we see that continuing to play out. And as long as there's a network, as long as there's a use, the energy is going to be needed, and that's going to continue the trajectory of how do we be very environmentally conscious, very strategic, and very thoughtful about how we leverage the energy to make it a win-win.
Just to add on to that quickly, the most important thing here is that Bitcoin miners and miners in general are building the infrastructure for new businesses to spring up, new disruptions to occur. And the best developers in the world right now are focused on Bitcoin and blockchain technology. They are working to solve problems that we're not even thinking about at this point in time. So as this industry continues to scale, if we're fostering that growth at home, we're going to see some of these challenges regarding the questions around full blocks be tackled by solutions like the Lightning Network or Taproot, which was recently implemented, other things that are going to come with Bitcoin and the innovations on the blockchain that are built by being able to support it here at home.
Thanks, guys. I think that's all we have time for. Lizzie, I'll hand it back to you.
Okay, thank you guys so much. We really appreciate your time. This was the most educational hour that we could have used today and this week. So we really appreciate you guys fitting us into your schedules. Everyone, I will be following up with the Digital Chamber's contact info. If you have any questions related to this briefing, to shoot their way. And then if you guys ever have any questions with anything the caucus is up to, or our policy stances, our initiatives, whatnot, let me know, and we'll get you info on that. But I think that's it. Want to close this off. Appreciate your time. Dave, Whit, Fred is gone, but appreciate all of you fitting us into your schedules today.
Thank you so much.
Looking forward to
Enjoyed it.
continuing the conversations on the Hill. Bye, everyone.
Take care.